We've just spent the last 30 minutes going through all of our email updates from people like CoreLogic, SQM, Michael Matusik, CBA, Propertyology, On Property, Phil Anderson, all of the people that we like to follow on a monthly basis to put together a really detailed and in-depth market update at the moment. And things are looking good, bro, aren't they?
I was like blown away by how good things are looking right now. Like in terms of the actual data, it's just phenomenal. Never seen anything like it, to be honest.
Now, we've got a double-sided sheet here, and it's
Double-sided?
kind of all over the place, so we're going to do our best to make it flow. Like, let's just kick it off with the stuff that we've got written down on this page from CoreLogic. Now, the 12-month growth from all of the big markets around Australia, all of your capital cities, has been absolutely amazing. Like, thrown in a pandemic, you would not believe that these are the sorts of numbers coming out the back end of it, hey?
You know, I knew that Brisbane that we've been buying a lot of was warm or hot, but these numbers are like insane. Like
It's crazy.
The best run that we've had in 10 years.
Yeah, like looking at this, we got Sydney that's increased by 11.16% over the last 12 months. Now, this was as of the 31st of May, so like this is the most recent data that you can get. Melbourne is up 5% over the last 12 months. Brisbane up 12.12%, which is just massive.
Yeah,
That's a top performer throughout Australia as well. Then the next best market was down in Adelaide, increasing by 11.84%. Perth increasing by 8.45% as well. So like this is really, really positive news for the property market, especially places like Brisbane, Perth, Adelaide that have had such a shit run for the last decade.
You know, one of the things that I learned over the pandemic was this concept that governments try and enforce called the wealth effect. And so when sentiment's low, when markets are really bad, one of the most positive things they can do to kick stuff back is to make people feel like they're wealthier. Now, the way they're doing that at the moment is just chucking all of these grants into the marketplace, keeping interest rates low, commodity prices are booming. Like there's so many other things that the government's tweaking at the moment with the long-term buying of bonds. And what has happened as a result of that, plus the massive undersupply, which we'll talk about in a moment, is, you know, the market's contracted, there's been a lot more demand than supply, and so prices have gone up. Now, when these prices go up this rapidly, people that own property like us and yourselves feel wealthier, and there becomes a knock-on positive effect on the economy, not just for sentiment, but for buying and selling of other things in the economy over time. So these sorts of numbers in 2 years' time are going to have a massive down-the-line effect in a positive way on the Australian economy.
And one of the other updates that CoreLogic was talking about was the release of the federal budget and what they're anticipating and some of the incentives and the stimulus packages put out there, which is amazing. Like they've basically come out and said that they don't want the real estate market to drop. They don't want the property market to drop because people have just been through a really tough year. And as you said, like best way to make people forget about bad times is help them make some money.
Without a doubt, like the average, I think, Liberal politician owns something like 2.8 to 3 properties, and
Wow.
the average Labor poly still owns over 2 properties. So it's not just their own money that they're trying to protect, but they know that so many of their voters have money in the market as well.
Let alone the developers that are paying them as well.
Without a doubt. So it's like they've been trying to work on a solution, and the Labor government was trying to scrap negative gearing a couple of years back. But what the, I suppose, Liberal government has stepped in to do, instead of just like smashing house prices, letting them fall, is making it more accessible or affordable for certain segments of the market that are struggling, like single mums, for example, single dads, to get in there, first timers get in there with all these incentives. And so as opposed to dropping the house prices, which is what they probably do need to do long term, what they're doing is just putting more fire or more wood underneath the fire to like stoke it back up.
Yeah, like some of the things that they've just announced that you've just mentioned is they've extended those building grants out, which is amazing for the construction industry. Like it is just going off its head at the moment, but this is just going to, you know, make that last a little bit longer, which is important for that sector. They've just released that I think it was a 2% deposit that single parents can buy property with nowadays, which is insane. Like they did a breakdown. They said, you know, it used to cost the average person to buy a house of a certain price. I think they said $44,000 for a deposit. They said with this new incentive, single parents may be able to get into the market with a deposit as little as $8,000.
Insane. Like, on top of that, there's massive first home buyer stamp duty concessions. I still think people can borrow up to, or some people, first timers, can borrow up to $30,000 out of their super and put that in as a deposit. Like, there's a lot of good stuff happening, which is driving prices up from the bottom. But on top of that, what we're starting to see now as well is the number of investors are starting to just rush back into the market as of late April, early May. So 3 months ago it was 75% mums and dads, which was the mortgages in Australia. Now it's 50% investors, 50% mums and dads. And I think by the end of the year, investors will represent about, 60+% of the marketplace again, which, mums and dads speculate to a price point, but when the investment money starts rolling back in from all those people that have made money in stocks plus crypto in the last few years, it's going to be phenomenal.
Yeah, it is. Like, a lot of investors have been sitting on the sidelines for quite a long time now, and this indicates that people are finally starting to feel a bit more confident, willing to put their money back into the market. And from the gains that we're seeing, people are making some good decisions.
Well, I was looking at some stuff from Simon Priestley at Biology. He writes an incredible blog for anyone that's not following it, but he said that basically since 2013, confidence in the marketplace and the number of investors has been, steadily dropping off the back of the changes that APRA made for investors. Now, a big problem that we're now encountering is an undersupply of available properties in Australia and a lack of stock. So there's plenty of houses, but people just aren't selling them. And like what he sort of said is, it really started, Sydney and Melbourne were booming. The government had to step in to slow those markets down. But instead of going, Sydney and Melbourne, we're placing restrictions on you, they went, fuck it, we're just going to put restrictions on every suburb in Australia. And not just that, not just the mums and dads like you and I that are trying to buy a property, but we're going to make it really hard for developers to borrow money. And so the supply levels have massively dropped. And as a result, the government's kept letting people in over the border, immigrants, students coming in, and all of a sudden we're in this issue where people aren't selling, people are moving, population in most instances has still been growing up until this year, and there's just a massive undersupply, which is putting more fuel under that fire. To turn that boat is so significant and challenging to do that it's going to take 10 plus years, according to Matusik.
Yeah, and that's why they've sort of been dropping those interest rates, making it a bit more achievable. They got rid of most of achievable. They got rid of most of the laws that were put in during that Royal Banking Commission as well. So it's not, you're not really looked at under a magnifying glass anymore. They are a little bit looser with their lending, putting it onto the borrower as opposed to the lender. So it's really just stoking that fire. It's like throwing a cup of petrol at it, really.
Yeah, it's kind of wild. Like, it's scary what it's going to do down the line. But for right now, there's going to be a massively positive wealth effect. And I think that's going to continue to last for multiple years, but don't quote me on that. I don't know. I'm just...
Time will tell, right?
Time will tell.
Yeah. Now, they've also, if people have been reading that Fed budget, they would have realised that the government's planning to spend over $110 billion on infrastructure over the next 10 years, which is great. That means jobs. It means upgrades to, existing infrastructure. We've read the infrastructure plan for some of the areas around Brisbane. It looks amazing, like adding extra lanes to the major arterial roads, upgrading some of the train lines and going from 1 to 2. A lot of stuff is happening, which is great. If it makes people easier to commute around and give people some more jobs as well.
Without a doubt. And there's also the obviously positive effect of infrastructure in certain suburbs too. So there's heaps of data on this over the years, but generally when high quality schools, infrastructure, main roads, airports, hospitals open up in an area, generally there's a major positive wealth effect in the area too. So keep an eye on those infrastructure plans, and regardless of where you're looking to buy, you should be really taking that into account. Yeah.
Now, the last thing with with CoreLogic was kind of talking about the market seems to be slowing down right now. And they back that up with, indicating there's been a bit of an increase in listings finally, which is necessary. So that undersupply that we were talking about earlier with the heavy demand is starting to balance out a little bit at the moment, which is slowing the market down. So rather than seeing, 2% plus months, it's starting to come back a little bit to sort of somewhere between 1 to 2% in most of the capital cities at the moment, which is exactly what we sort of need right now, a bit of an increase in supply to sort of give you a bit more of an equilibrium.
I think as a business, we've bought about 60 properties in the first 5 months of the year, and it's been a really challenging market to buy that many properties in. But I started to notice it probably 8 weeks ago that things were softening, and now it's beautiful. Like, there's not as many people rushing in there doing crazy things, where we're getting sort of 60 to 100 groups of people rocking up to an open home a couple of months ago. Now we're just getting 30 groups as opposed to 10 offers on every property. Now we're just seeing a couple. A lot more properties are being sold off market, and people are getting sensible again now. That's not just as a result of people going over the top and then settling. It's also a time of the year thing. Generally between around about May till October, people forget about their New Year's resolution, and they don't remember it up again until October. It's also like getting colder in a lot of parts of Australia. People start settling down. So it's a great opportunity to take advantage of the current market for sure.
Yeah, and there was also talks from a heap of different people and pretty reputable people, CBA coming out indicating they believe this could happen, plus Ray Dalio, Warren Buffett and Michael Burry. He's a guy that was in The Big Short, I believe, and they're all indicating and believe, especially over in the States, that they expect some interest rate rises to slow the economic rebound because it's been so much better than anticipated. The RBA is now looking at going, okay, cool, we need to do something to try and slow this down a little bit and, likely interest rate rises. But when we saw that come through from Ryan at On Property, he actually kind of indicated the correlation or the link between interest rate rises and capital gains. And he broke down an example from an article that we got from Homely, where they broke down the year-on-year capital gains in the major metro markets in Australia. He then relayed with the late 80s interest rate rises. Basically in 89, the interest rates got to, 18.45%, which is just insane. But in that same year, in 1989, according to this article from Homely, Sydney increased by 23%, Melbourne increased by 14%, and Brisbane increased by 13% in that year.
31% Brizzy did.
31%, sorry.
It's crazy, man. That's one period of time, but what Ryan had found from overlaying the 50 odd years worth of data versus all of the times where interest rates had risen over that time is there's not an immediate and direct correlation between a rise in interest rates and house prices falling over. So it's important, but again, I think he had a quick look at it. It'd be interesting to get someone like the guys at DSR or something to do a proper look, you know what I mean? But it's interesting to see that. I don't think interest rates rising is going to have any negative effect in the short term. But when interest rates rise to a point where it makes the average person in America a little bit shaky compared to how stable they feel right now, I think that's what caused the last GFC, the result of interest rates spiking and people switching from interest-only loans to principal and interest. That's probably the same thing that's going to cause issues this time around. If interest rates in Sydney for the average home at $1 million debt were 5% with principal, a lot of people that are earning 120 grand a year would be spending 70 grand a year on principal and interest, and they'd be getting really, really tight. Yeah. So, these things are coming. It's important to know that things look great for now and the next, we believe, based on Phil Anderson stuff and Fred Harrison stuff, that the next, 4 to 5 years will look pretty strong in certain parts of Australia that haven't already cranked. But, just know that there's also storms coming down the line and people need to be aware of those as well.
As always. And then SQM, couple of really cool updates, mostly just the vacancy rates, which are still declining. It's just ridiculous. I just can't believe it. The national vacancy rate as of April was at 1.9%.
That's insane.
It's just so undersupplied. So not only, this is the knock-on effect of the developers not being able to do their projects because they were struggling to get finance. It's now there's not enough properties for people to bloody live in. In Brisbane, as a whole, it's down at 1.4%. Most of the suburbs that we're looking at nowadays are below 1%. We're hearing crazy stories. One of our clients just finished building a new home in a suburb about 25 k's from the CBD. He built like a 4-bed, 2-bathroom house with another attached but completely separate 2-bed, 1-bathroom granny flat. He ended up renting the house, the 4-bed, 2-bath house, for $550 per week, and the 2-bedroom granny flat for $360 per week. Now, he's getting about a 7.5% rental yield on that asset right now.
I told him when we went through the deal together, when you and I found it, that I thought he'd be able to get about $430 a week for the house, and about $300 a week for the granny flat. Now, we always do that. I'm always talking the yield down, but phenomenal. Like, I've seen another client who bought a place about 21 k's from the city for 400 k's Ziad the other day, and he got 40 people rock up to the open home.
40 applications.
Insane, man. Like, it's so insane. We bought another property for a Melbourne client on the beach of South Brisbane the other day for 580k. I set his expectations on the rent return at 480. He's just rented it for 600 a week. Like, it's us being conservative, but it's also like the market demand in certain suburbs is just through the roof, and there's just no new development coming on.
Yeah, well, like, Queensland makes a hell of a lot of sense. Michael Matusik came out with his update on the population growth in Australia, the internal, obviously, like, there was no international people coming into the country last year. So this was in 2020. Cool. So this is a little bit dated data, but still, like, New South Wales last year lost 18,873 people. So that's just crazy. Victoria lost 12,737 people.
It's almost to the dollar cent for Queensland.
It's crazy. And then Queensland was up 30,018 people in 2020. Like, that's a lot of people moving over the border, and that puts more pressure on the rentals. It puts more pressure on the market as well. Especially when the Queensland government was forcing people to have a Queensland address before they moved up here.
I feel like 10,000 of them must have moved to the beaches on the sunny coast, because those beaches went up by 50% last year.
Yeah.
I swear to God.
They've just boomed. It's crazy. But then, it's important to recognise some of the other areas, like Sydney, like Queensland, Victoria, and New South Wales just take the massive lion's share. Like, Western Australia gained an extra 1,300 people last year. South Australia got less than 100 people, and Tasmania got just under 1,200 people last year. So, most of the movement is coming out of those big 3 states on the eastern seaboard here, and it's just absolutely insane that so many people are moving around.
I've said this in videos for a long time, and it's not just the COVID thing that created that. There's a long-term population cycle in Australia, and the cycle looks like once every 15 years, Sydney and Melbourne get so bloody expensive that people just leave.
Yeah. Now,
COVID or non-COVID, people getting stuck in 1 and 2 bedroom units in Melbourne for 9 months, I fucking get it. Get out of there. But it's it would be happening now anyway. The last time this happened, I think between 2000 and 2007, prices in Brisbane went up 128% and 140% in Perth. But if you look at it, Sydney and Melbourne had been on such a tear up until that point where they were so unaffordable again that people were just leaving for a better life. And the incomes at that time in Brisbane and Perth were strong. And then the incomes declined in those markets, and Sydney and Melbourne's incomes jumped for the last 15 years, 20 years. And now we're at a point again where the incomes in Brisbane are higher than Melbourne, almost the same as Sydney. The incomes in Perth are higher than Sydney and Melbourne. It's kind of just a natural thing for people to go, I don't want to spend $1.5 million to be 30 k's from the city of Sydney when I could spend 400k to be 20 k's from the city of Brisbane.
Yeah, and affordability's got to be a massive thing. I think it's linking that sort of population movement around Australia with how the property markets perform as well. You get Sydney and Melbourne do really well, like what they have, and that was sort of in the, late 90s to the early 2000s, they did their best. And then all of these people have got a massive increase in their real estate values, so then they can sell that, move to another place, and make it way more affordable for themselves.
Completely. I've got friends that have good money in the bank through their equity. Let's say you've got $1 million, and it's they could literally choose to be just debt-free right now on a beautiful $700,000 home with $300k cash in the bank that they could invest in whatever they want to invest in. And it's kind of interesting and exciting, which is obviously why 30,000 plus people have come over the border last year. The last thing I wanted to say that I think is positive that isn't everywhere in the news at the moment is just Australian commodity prices. Now,
Yes.
the Australian government last year and CBA, when they were talking about the budget deficit, because obviously we've gone into a shite load of debt to get us out of the last year safely, as has the whole world. But the difference with Australia, and this is the most beautiful thing, and I think there must be some super smart people in the Australian Treasury, because like they just keep getting us out of these issues like so much better than other countries are. But you know, commodity prices, when they were expecting to repay the deficit, they were talking about iron ore being at $60 US a ton. Now it's at over 200, up to 210 a ton. That might not sound like much until you realize the volume of iron ore that we're selling to China. The entire world is in a construction boom right now. It's not just Australia. The entire world is getting itself out of this thing through creating jobs in construction and infrastructure. They need our sand. They need our iron ore, they need our coal. And these things, like, while Australia's got them under the ground, are literally like the amount of money that the government's going to get back so much faster in the next 5 years. Like, we're looking at like 15 years, 12 years before we'd be in surplus again. Now we're looking at, if these rates hold, which based on the long-term K-wave that Phil Anderson talks about, they could hold for the next 8 years and have a good run, or the next 6 years, could bring the payment of the budget deficit back so short that by the time we get into our next major financial crisis, we might be able to get ourselves in a shitload of debt again to bail ourselves out one more time. Like, it's just wild, like, you know, how lucky Australia is to have these resources, but then have a government that isn't corrupt and that gives the money back to paying off its own debt to like reinvest in jobs in the economy. It's just, you know, South Africa could be in just as good a position. So could South America.
Yeah.
It's just the governments there aren't, you know,
They're
looking
stable.
after the money as well.
Yeah, it's unbelievable. Like, we're so blessed to be living in Australia, and we're so fortunate to have an awesome government like that and so many great resources underneath the ground as well, especially when we're in the time that we're in right now. You know, so all of this stuff is, you know, positive news, positive sentiment. People are feeling good. You know, there was over $1 billion spent in April, I believe, in renovation work.
That's right. The biggest month on record, wasn't it?
Yeah. So, you know, people are taking the equity out of their homes and renovating their homes, which is adding more value to those homes as well. And it's just all good news, right? Like, you know, in our, like, going through these numbers, going through these different updates, like, it really gives me a hell of a lot of confidence as a landowner moving forward. And for any investors out there that are, you know, just getting started, these are all really, really positive things that are occurring around Australia at the moment.
Yeah, we're definitely not saying to like rush out there and do stuff. Of course, you want to go back to our previous videos or the Pumped on Property Show podcast and listen to some of the fundamentals we discuss. You know, I'm not rushing into Sydney and Melbourne to go buy right now, because they've already gone up by 60, in some instances 100% in the last 10 years. But well-priced property in Adelaide, Perth, Brisbane, that you hold over the next 30 years that you buy at the moment, if you're in a position where the banks will lend you money and you've talked to your accountant or your financial advisor and they think it's safe for you, like, could be an incredible buy. And then you've got to remember that great times turn into negative times, and negative times, which was last year, can turn into great times as well. Like, it's all to do with sentiment. It's all to do with the movement of money. And right now, that can is being kicked down the road by so many people globally that, you know, some people are calling this like as good, it's going to be as good a period as the Roaring 20s. There's some money to be made in real estate, maybe stocks. I'm not a stock investor. Maybe there's money to be made in crypto. Maybe there's money to be made in the right businesses as well over the next 5 or 6 years. So your job as the investor is to figure out your niche, take advantage of that, and safely set yourself up on a good foundation so that when the whole thing blows over in the next decade, you're not sort of the one stuck when the water dries back out.
As Ben was saying, you know, we do lots of videos, you know, market update once every month, but then lots of other videos on the fundamentals of property investing, some unique strategies. Now for us, we're just lower risk, longer term investors. You know, we're not trying to get rich quick. We're just trying to buy a small number of really high quality assets in great markets, work on paying those assets off over time to then live off the passive income financially free. So, you know, if you want to follow our channel, then please hit the red button below and subscribe to our YouTube channel. Head over to Apple or Spotify and check out our podcast, The Pumped On Property Show. And for more detailed and more up-to-date stuff, then jump over to our Instagram and Facebook page. Give us a follow, give us a like, and stay in touch. All we're trying to do is keep you informed, try and help you make better decisions, and get out there and invest safely as well.
Cheers, guys. We really appreciate your time today. We wish you all the best and all the safety moving forward, and continue to learn so that you can invest better with confidence.
Have a spin. Yeah. Oh, sweaty. So sweaty.